Hi everybody, and welcome to this week's show of the Lincoln Property and Mortgage Show. Thanks for joining us. Slightly later time, that's entirely my fault, and I'll explain why in a moment. But just want to say thanks everybody. Again, we've had a few people commenting and supported us as well. Just saying no problem with the slightly later time this week. But yeah, just want to say thank you for joining us. As always, with myself, Mike Collenby, and Jenny. Jenny, let's jump in. Let's get the credits going, and we're getting straight into this week's show, shall we? There we go. So let's just go back with that. Apologies. Yeah, that was down to me. I had to put a phone call into Jenny a little earlier this evening. And this is the thing when you work for yourself, when it's your own bespoke agency. I needed to scoot off and go and do a viewing this evening on one of our most popular properties over on Western Avenue. So it turned out to be an extremely good and valuable viewing with some more potential in regards to their home that they're looking at selling as well. So sometimes the whole point of having a bespoke tailor-made service is you need to be available for your clients, which just meant I needed to go out and go and do the viewing. So I've literally just sat my bum down on my chair, grabbed a bottle of water, and we're ready to go, Jenny.
We are, and apologies because I have already had a client say to me, but Jenny, EastEnders is on. So apologies that I'm disturbing EastEnders time there.
And you know what?
Catch up.
Well, I was just going to say, I nearly showed my age there because I nearly said, "Oh, you can record it," but obviously you don't record anymore. It's +1 and all that malarkey, like you say. So yeah. There we go. Well, the interesting thing is, let's see if that person is watching tonight, and if they are, they can stick us a little thumbs up, and then we know that they're watching us, and rather than watching EastEnders. So there we go. So just on that point, if you're watching tonight and there's any questions, you've got any comments, any feedback, as we always see every week, just down in the bottom right-hand corner, you've got the post a comment box. Pop it in there, but put your name on it, and that way we know who's obviously reaching out to us, so we can come back to you. But again, if you're watching the show, please make sure you like it tonight. Again, share it afterwards as well, and just so that we can make sure that we spread obviously the news and obviously the content of what we're going to be covering tonight. So talking on that, Jenny, if you want to cover what you're talking about this evening.
So I'm going to be looking at gifted deposits. I think it's a year of gifted deposits. We've seen a rise recently for many, many years, but I think this year we're going to see even a bigger rise in people gifting deposits.
Excellent. And then I'm going to be covering over and talking about the sort of predictions for the Lincoln property market and the UK property market for 2024. And I'm going to be looking at where we've started off the year in regard to numbers on the properties on the market compared to the few years before. So we're going to do a little bit of a deep dive just in regard to the numbers and stats there as well. So if you like, shall I kick off and start on that subject this evening then?
Absolutely. You crack on, Mike.
Fantastic. First thing to say is obviously we've just noticed we've got a few people watching already. So again, thank you for joining us this evening. Much appreciated. So what I wanted to have a look at, one of the questions I'm being asked a lot at the moment is obviously what are my predictions and forecasts for what's going to happen in the property market this year. And again, for those of you who've been watching the show regularly, you'll know that we've been having a look at what happened in December and in the first week of the new year. And how we think that that's going to influence the market and where we see pricing going for this year. We've talked about interest rates and all the sorts of things, that are influencing the market, particularly in regard to the media. But data is key because that will indicate obviously where we are as a starting point going into the new year. And if we look back at previous year's data, that will often give us a prediction to what's going to happen in the future. So I'm going to dive into the figures a little bit. But Jen, if you be kind of just put the slide up, I'm going to show you obviously where we've got some previous year's statistics in here for you. This post is also up on all of my social media as well on Facebook. So if you want to really sort of draw down into any more information on this, then again, please reach out. And again, the details are on there. But what this has basically tracked is what's happened in the property market back from 2017 up to December 2023. So let's just come back to me in that case, and I'll tell you the numbers. So if we go back to 2017, the number of properties in the UK property market that were on Rightmove on the 31st of December. So to shout some numbers out, rounded off, 502,000 properties. December 2018, 573. So there's 70,000 more properties on the market then. December 2019, 544. Then December 2020 was 543. So very, very similar. Now, interestingly then, December 2021, 342,000. Now, that's obviously the influence of COVID. So there's a
Mhm.
sharp drop there of nearly 200,000 properties on the market at that point. Okay. Then when we go into December 2021, 2022, it goes back up to 418,000. And in regards to December 23, that number increased to 560,515. Now, if we look at that figure for 2023, so 560,000, that sits us between the years 2018, 2019. Now, the reason why I use that as a comparison is pre-COVID, everybody thought the property market was buoyant, it was active, there was loads of
Mhm.
sales, nobody was talking the market down. Obviously, interest rates were low at that point, but we've talked about interest rates and where we think is a sensible borrowing percentage in regard to sustaining the economy, Jenny, which is something, again, you've really delved into in the figures in the past. But they are two really, really important years, I believe, because it gives a bit of stability over a 24-month period. But it also gives us an indication that we know in those 2 years that we know the number of house sales that then completed in the UK. And we can draw that down to Lincoln as well. Where it became affected the following 2 years is obviously going into lockdown and then the year after. And the year after was significant, mainly the reason because mid-year we had a stamp duty exemption period. So everybody came
Mhm.
out of COVID, everybody wanted to move. The government needed to get money into the economy as well. So there was a tax relief on stamp duty. And every man and his dog, you'll remember it, Jenny.
Oh, 100%.
Oh, I've got to complete in a week. Where's my
Yeah.
mortgage offer? Yeah.
That I was that person as well, by the way, just so that you know. I moved during that time and took advantage of that stamp duty.
There you go. So yeah, in real effects on that, again, where we've been there 3 years. So again, similar thing. So it affected a lot of people. But what happened is there was this balloon that sort of popped mid-year, and then it quietened down, and that's again another reason why we saw a dramatic drop down on the 31st of December going in to the next year. So it's only really been 22 and 23 that the figures have started increasing again, and that shows the significance of the market having to come back. I would also argue that mid-year of 2023, the market with the numbers of properties on the market was also still quite low,
Mhm.
because we were seeing that cost of living, the economy, the Ukrainian war, there were so many affecting factors in regard to the property market. On top of the media jumping on the bandwagon, there weren't many transactions of properties being on the market.
Yeah.
Somebody asked me a question earlier last week as well in regard to, what are the predictions for 2024? And I said, well, that depends. Are you looking at it from a seller's point of view or a buyer's point of view? Because it's
Mhm.
two very, very different conversations. Where we see it at the moment is, again, based on data in the past, the expectation is we're going to start to see numbers going back to 2018 and 2019, which is promising.
Mhm.
It's my view that properties, as long as they're realistically priced coming into the market at the beginning, something we've spoken about a lot, those properties will certainly obviously help with the numbers of transactions that complete this year. So that's where I'm probably seeing numbers in regard to property sales. Last year, if you from a couple of shows ago, I mentioned that Lincoln property sales were down by 19%, which was just under 1,300 property transactions. So big effect in regard to our local market. I probably see that will certainly jump back up where we're probably 13 to 14, 1,500 up on where we were last year, which is the equivalent of about 100, 110 sales a month better off. I think it will probably snowball a bit, that we know that there's that amount of properties on the market now. My hesitation is some of those properties have probably gone on the market a little ambitious in the marketplace, maybe still.
Mhm.
But I think as we get into the first quarter and into half year, that market, that stability will come back in. There'll be more buyers, but more properties. So that demand and supply element will leaven out onto a more even playing field as well. So in answer to that, I think the first quarter is going to be busy with plenty of properties coming on the market. I think the pricing in the economy and the industry and the mortgage market will level that field out by half year. And then I think the second half of the year will probably be a little bit more smooth, a little bit more predictable, and probably even out a little bit more sensible. And I think we'll probably end up at the end of this year back again where we were with those numbers again at around about the sort of 560, maybe even 600 then on the market, but at the end of this year as well.
Absolutely. And Mike, you're definitely a figures man. And you would think that being a mortgage broker, I would be all about the figures. I'm not. I'm all about that pink and fluffy emotional journey side of things. And what those figures show to me is that confidence is rising in the market. It's rising with the lenders. It's rising with people coming onto the market, buying and selling. And that's the real important thing, because if people have got confidence, they will make the decision to move, and they will start that process. So what those figures show to me is we're getting back to a sort of a standard level playing field, like you say, and people are wanting to take that jump and wanting to move.
Yeah, most definitely. Yeah, I think that's definitely what's happening. I say confidence is a huge thing at the end of the day, and people are averse to risk, and we're all very tribal people as well. So that when we see that something is happening, either positive or negative, we tend to follow it. And of that, we are influenced by the media and the representation there. But what we're now starting to see is you'll have driven round and about. You'll see more boards going up. You'll start to see those change to sold. And then again, that tribal bit of confidence comes back into the marketplace.
Absolutely. And, rates are, like you say, coming down. So that feeds into the confidence as well, because people aren't seeing those rates. And someone said to me, I was speaking to someone at a big high street lender in the week, and someone was saying to me, Jenny, it's because there's rates under 5%, even though it might be only 4.98%. In people's head, those interest rates are under 5%, and that just feels more comfortable. That gives them more confidence that they can make the leap. So I think overall, and I've been saying it all year, 2024 is the year that people move. And I truly believe that we're going to have a cracking year within the industry.
Let's hope so. Keeps us both busy, doesn't it?
It does indeed. As you saw tonight.
That's it.
Testament to it.
Okay, so that's my bit. So if you've got any questions at all, if you're thinking of moving and again want to get an idea of your market value, or if you want any more sort of help, tips, advice, anything like that, follow me on my social media, or again reach out to me. Be more than happy to meet with you over a coffee and give you some more advice there as well.
Perfect. So that leads me on to me. Now I know my mum is in the other room watching this because she's come up today. So, and I'm going to call out my mum. So we might get a comment from the wife, because the mum won't be able to put that on Facebook. So a couple of years ago, I had a conversation with my mum, and she said to me, and I just said, first time buyers, people are really struggling to get onto the mortgage and get a mortgage. And she turned around to me and said, well, it was the same for me. I struggled to get on the mortgage ladder. I really struggled with my deposit. Nothing has changed. Now, I'm just going to say wholeheartedly, I think she was wrong. So she may have had her first mortgage when they were at 15, 20%. But when we look at everything about how relative it is, house prices were a lot lower. Our wages have not kept up with inflation. When she was buying her first home, inflation and wages were in line. In fact, it was probably tipped in favour of the wages. People don't move as much as they used to. So we spoke about this last week, Mike, how people are tending to buy almost their second home as their first home. So therefore they need bigger deposits. They need more income to be able to do that. No job is set for life, let's be fair. When I speak to people and they say, I've been here for about 15 years, I'm always shocked. I'm like, wow, really? That long? Most are sort of 4 or 5 years. And then the rents, what you're paying for a rent has hugely increased over that period of time, and they are just going up and up. Every landlord is knowing that this year they're probably going to see an increase in their rent. They're going to see an increase in their mortgage payments, so they may not be any better off, but they will see an increase in their rent. And that means that people can't save for their deposit. So wholeheartedly, I think first-time buyers at the moment, especially now the Help to Buy scheme has gone, are having a challenge, shall we say, to get that deposit together. And there's a couple of schemes out there with zero deposits that you need. But let's be fair, you've got to jump through hoops to secure them. So this is where my bit comes on to. It used to be called the Bank of Mum and Dad. It's now called the Bank of Mum, Dad, Aunt, Uncle, Sister, Brother, grandparents, and neighbours, friends, whoever you can get that's going to help you out. And lenders are seeing this now. So before, when I first started in the industry, it was very much a blood relation, mum and dad. And if you were really lucky, you get away with maybe a brother or a sister. that has now opened up. We've got lenders out there that will consider friends, non-family members, those aunties that your mum always say, go and see auntie, whatever, and they're never an auntie, those close relations, they can all be considered. So when we're looking at deposits and we're looking at gifting that over, there's a couple of things that I just want to bring to your attention to make sure that we get it right. Because sometimes people get a bit confused about what a gift actually is and what criteria we need to meet to be able to have that gift. So the biggest thing is if you're receiving a gift, it needs to be non-repayable on the whole, which basically means they're literally going to give that money to you and you don't have to pay it back. And that will be asked, you will be asked to sign your gift. Will be asked to sign that. Okay. The other thing is they can't have any hold over the home. So there can be no agreement that when you sell it, you're going to pay it back or they get 10% of the property. None of that can happen. Most lenders don't want them to reside in the home. So there are a few lenders that will allow that person to come and reside in the home. Now, a situation like that might be you've got a young family and mum and dad's going to sell their home. They're going to go move to a bigger house, help with the childcare. Then they're going to get helped with old age. In those scenarios, we tend to be able to get round that. And what they don't like to see is someone gifting the money because maybe they don't meet the requirements of a mortgage. So some lenders get a little bit nervous in that. But if there's a situation there where mum and dad are selling, they're going to gift the money to the children, they're all going to live in one big happy house, just like you do in Europe, then we can tend to get around that as well. And the other thing is they will want a gifted letter. Now, some lenders have a template that you need to supply. I always send a copy of a gifted letter that I'd ask anyone to complete. That will be sent to the lender, to myself, and to your solicitor. Okay. Now, all of that being said about the criteria for a gift, there are a couple of caveats. So, like I said, it can't be repayable, but there are a handful of lenders that will allow that to have. You will be able to have what's called a charge put on the property. So, for example, you've got £100,000 mortgage. They're going to gift you 10%, so 10,000. There's a couple of, and high street lenders as well, that will say, right, well, you can't pay it back on a monthly basis, but they can put a charge on the property for the equivalent, whether that's 10,000 or 10%, depending on how it wants to be done. And then when you come to sell that home, you can repay it back at that point. There are a few lenders that will allow to do that. And like I say, there's a few lenders that in the right scenario, that person gifting can move into the home. So how do they gift that money to you? So I'm often asked, do I need to quickly get it into my bank account if mum and dad are gifting it or my brother's gifting it to me? No, you can have that money. They can literally send the money directly from their bank account over to your solicitor. If you have it put into your account, what we're doing there is adding another layer that we need to get through. So we'll need a bank statement from their account to your account and then your account to the solicitor. And it just confuses the matter. They can send that money directly through to solicitor and it just sort of removes all of that for you. So how can they raise that money? Well, there's several ways they can do it. Equity release in two forms. One, they take the money out of the home as a standard remortgage, or if they're of the right age, equity release as well. And I'm going to bring an awesome person on in a few shows time that is really good at equity release. So we're going to have a chat around that. So we'll go into a little bit more detail in that. But in essence, they can release the money from the house and give that to you. It could be personal savings or they've took a drawdown from their pensions. That's all okay. It could be they've sold a property. Maybe they've sold their property. Maybe they've got an investment property they've sold. And then the one that I see quite a lot, which always warms my heart a little bit, is when you've paid all your rent for a period of time and then they come to buy and they go, here's all the rent that you've ever paid us back. That is still classed as a gift, even though in theory it's your money. That is still classed as a gift and it can be used towards your deposit. And remember, with a deposit, it can be a mix of several sources. So you could have a gift, you could have your own personal savings, you could have premium bonds. There's lots of different ways that we can create that deposit. So on the front of it, it may be that first time buyers and even people who are moving home might be struggling to raise that deposit. There's lots of options out there about how we can raise that deposit and get you that home.
Well,
So
that
yeah.
was really, really informative. There's so much information in that, Jenny. We're getting a few thumbs up there as well. So Caroline in particular liked a lot of what you're sort of putting in the conversation there. Are you starting to see this sort of coming through a lot more just in your applications and inquiries again at the moment then, Jenny?
Yeah, I think gifts have been really big at the moment. You know, they have been for several years, but I think what I'm seeing now is more reliant, though, conversations where children are approaching their parents rather than the parents
Mm.
approaching the children and saying, look, we're desperate to get on the housing ladder. You know, I know potentially this is coming my way in the future. Is there anything that we can do now to make that happen and get on the property ladder? And I'm seeing more and more parents wanting to gift that so that they can see that their children are, you know, enjoying the fruits of their labor, for want of a better word, that they're settled in their home, that they're giving that. I think, you know, years have gone by where grandparents would leave it to the children or the grandparent and they would never see them enjoying it. Now
Yeah.
more and more people are looking to really to see that happening and make that impact on people's lives, because it's a huge impact by doing that, by gifting any deposit. That's like amazing. That's giving
Mm.
people their own castle.
And do the lenders normally have a particular percentage deposit you need to put down? I mean, I know a few years ago there was a couple of lenders out there that were doing the 5% deposits where 10% was the norm. Is it normally that a homeowner will? I suppose it depends on the lender and the circumstances, etc. But are we seeing that it's normally as a rule a 10% deposit of a purchase price, or is there a bit of a rule from there?
No, we're seeing, so in COVID, we saw, so you can have 5% deposit, but in COVID, we saw that lenders wanted 15, 20%. They wanted that security. And slowly we start to see them coming back. And recently now, the 5% deposits have had really high interest rates. And it's kind of put people off because it's just not been affordable, or in their head it's not been affordable, which is understandable. Now what we're seeing, which is why I think again lenders are growing in more confidence, those 5% deposit interest rates are starting to come down. They're
Yeah.
never going to be the lowest on the market because it is a 5% deposit, but we're seeing that that's starting to come down. Again, your deposit that you need to pay, the percentage, will be based on your credit file. So I bang on about this all the time, but
Yeah.
please check your credit file as soon as you think I might want a mortgage. That's the first place that we go, because that's going to dictate the deposit percentage you need to put on your home.
Spot on. So again, lots and lots covered there. Some really helpful information. I'm definitely seeing where people have been in rental properties for a number of years, maybe 3, 4 years, and like you said at the beginning, they're seeing that rents are going up, and if they want to move up, they're probably paying more than what they've ever had to do in the rental market. And now those conversations are happening with parents to say, can you help? Can we get onto the actual property ladder? So yeah, I think like you say, it's very timely. So yeah, really, really good topic. So again, if you've got any questions at all, again, please reach out to Jenny again. You can follow her on all the social media, or again, ping us a message afterwards. More than happy to come back to you as well. The other thing as well, if you know friends, family, neighbours, work colleagues, again, that are looking at moving or looking at remortgaging, or you have any other questions, if family are talking to you, again, just reach out to us. And that's exactly why we are here. We are here to help. So great topics. I think we've covered a lot in tonight again. As always, thanks for watching. If you've missed any of the previous shows, you can find us all back on again on our social media, or again, we are building out that YouTube channel that you'll be able to go back and look at all of the previous episodes. I think we're probably coming up to about 4 or 5 months or so, I think, aren't we now, Jenny?
Yeah, something like that. And when Mike says we're building that YouTube channel, what he really means is he's building that YouTube channel.
And you know what? After you said that comment last week, I was sat there still at about 2 o'clock in the morning, still building all the links into the channel. So it is very, very nearly there. And the only thing that's holding me up is I'm trying to work back which episodes
Yeah.
were in which weeks, because I'm having to go back the catalogue on it. So once they're all redone and renamed, they're all in there. So yeah, that is coming on its way. So watch out for that as well. So again, thanks for joining us. Again, we've had lots of people watching tonight. We've had lots of thumbs up as well. We really appreciate your encouragement. So the key thing, as I say, is if you're not following us already on our socials, which I know most of you are already, but thank you very much. Just spread the news. Excellent, great show. Thanks again, Jenny. And we will look forward to seeing you all back at the normal time, 7 o'clock next Tuesday.